10:26 a.m. 4/6/2012, and welcome to everyone. What I would like to emphasize is the Nasdaq composite, and I would like to emphasize this complete bull run that we've had on a weekly level, and that we were peaking at around 97%, and how we would hit these exhaustion highs and where that bull would pull back to lower support levels within its long-term 2012 bull structure. And we can see it. This is a weekly level. And that bull structure started right there. So these upper trend lines were our resistance lines, and they hit them. So I really don't want to get rid of those, but I will get rid of this one right here. And what I will do is I'll just show the MMT on a standard platform, and then I'm going to pull our platform up, and I'm going to show you why you're going to gap down. And it was all about this level right here. Here, let's delete that, and let's put this right about there. Okay, that's 29.95. That's right above that 10-week moving average, because that's what that is. That's all standard stuff. Now, when you take a look at where the weekly breakout bars were as we were taking that bull all the way up here, is where does the bull once again go through its exhaustion, and how far that calendar year bull has ran as it has. And it's been great. But now you're getting to the other side of things. And as I have said, you are going to see price volatility increase starting April 1 of 2012, that you would see a price volatility increase as you are on both sides of the market, meaning that once you finally hit the upper end of that bull, you start to see where pullbacks from that bull have to pull back and shake out buyers, and that each level of support is going to bounce, and you're going to gap down on Monday on the Nasdaq composite. As far as where our futures market are today on Friday, yes. And that lower support level would be healthy for the bull to come down here. And just remember, every bull will have a pullback, and what we're looking for is where that public figure wants to step in there now and buy up these markets, okay? And you got the earnings season coming, but you're going to gap down, and I want to show you on the weekly top. And this is the weekly top. So when I go in here and I take a look at what the weekly high was, I'm going to tell you right now, it was 3134.17, okay? And the reversal low from that area is down to 30.052.58 intraday weekly low, that is. So now let's go to the MMT platform, and let's see why that makes more sense in our way of doing business. And when we take a look at the exhaustion highs, we take a look at how these daily bars, that's what this is, daily bars on the Nasdaq composite. And as we moved with the gaps and we got more overbought, we called for reversals. We have all the live videos on stockmarketpundit.com. You're welcome to go back in time and look at the date. Now, one of the things, the key emphasis is where the top end of the bull gets more directional price volatility within the top end reversal and the lower end at buying at those support levels once the middle side of the market has been totally shaken out. And that's where the best opportunity, well, that's where the big wholesale prices are. So we're going to gap down Monday, and we're going to be looking at the half bar over here. That's going to be 3018.18 MMT on Monday. And I will tell you that on the daily chart, each one of these lines are 16.89. 16.89 per delta line in the SMF platform. And the dots there, those are the diamonds. The diamonds, you can see where that price volatility and all of the directional movements at the highs, at the reversals. So when you have the first reversal to this major support level on the composite, we popped right back up. Now look at the script. 1, 2, 3. And if you go 1689 times 3 delta lines, that's your total movement. And this is how accurate this is. This is not deceptive. And so you can see here where you've come down 1, 2, 3, 4. And we're going to look for the support level down here at number 5. And down here will be number 7. And that lower support level is going to be right there at that 3,000 area. And that the bull exhaustion, like I said, every top gets that much more overbought, even if the high frequency model machines are pumping those prices to those highs. At some point, they're going to cross the market and they got to come down. And that every top, every bull market top has a trading pattern to it. And if you go back right here, 1, 2, 3, 4, 5 days ago. Okay? 5 days ago. And if you go back 1, 2, 3, 4, 5 days ago, and this is all on the composite, every time it hit the SMF market maker price line, it gapped higher, as it did. And you can see where the diamond reversals were. And you can see the volatility back up to the gap down. Now, what we call a continuation gap down is that the Nasdaq composite gaps down in a place like this. Let me show you. MMT. Basically, this half bar right here is 30.18 on a daily. This lower half bar over here on the week of 3/9 of 2012, that was March 9th now, that high was 2993.98 MMT. That's going to be a support level of great interest on a gap down, is how we gap down to this half bar on Monday morning. And if we break the bar, here's where the daily breakout was. There's that shakedown, and here's that gap, that delta gap. That was a big gap. That's a half a delta. Look at that. And it took out this whole price right there. As soon as that happened right here, it was time to get long and stay long until you got up to the volatility top again. And for 3 weeks in a row, number one, we said that the first bull exhaustion would happen in the first week of April and closing out that March trading week as well. And if you go back 1, 2, 3, 4, 5 days, this is a 5-day range. And yes, you went up 1, 2, and this is our systems that we build for people. But we have different ones than this, though. All right? However, you can see that gap down, and we're going to look for this gap down right here. It's going to be this half bar on Monday. Let it be known. Because we're going to look at where the weekly or the daily gap was, that's going to be that price support. And if that is on the Nasdaq composite, well, then we're going to start doing all kinds of things. We're going to start doing this. We're going to start trading that Nasdaq 100. Yeah, because it's Nasdaq 100 and it comes from the Nasdaq composite, as it does. And I'm going to make markets like you won't believe. And that means that these contracts, they're indexed Nasdaq 100 option trading, but market maker level, because they pay extraordinarily a lot of money. And they do. And we trade the weeklies, we trade the monthlies too, because we do. Here are the weeklies, and they've only been open 1 day, today. So basically, we'll be looking at the monthly expiration to get a good idea of why we're going to be buying this right here. And once again, I'm going to show this chart was a weekly high bar right here, and I just want you to see it. And I want you to see the high was $66.15 up here on that call, and that the low was 33.30. And I bought it down here, but we unloaded it, and it got up here, and but you can see where it was retail. Now we're going to be trading that call because we would love to buy it, and that's going to be this one right here. It's a 27.35. We're also going to look at the 27.25 on the gap down on Monday. Here it is. This particular 27.25 call was totally inflated in price in the bull run. And call and puts get inflated and deflated. Now, let me show you something. This is that 27.25 call. That's going to gap down. When they get inflated, they come down. And what did we do? We did this. We had bought the $2,800 put earlier in the week. When they were at their high, we bought these at the bottom, and they closed at 75, but we sold in the first cycle of them. And we bought the calls too and sold them. So basically what I'm showing you is that this 2,800 put is going to gap up and take out that $75. Last print was 56.86. That's 18.46 marked down to that wholesale bid, and that entry at that what? Taking that dollar cost capital risk out of the entry is the most wholesome thing that you can do, MMT. And that's why you're being taught that every entry, whether it's the long side or the short side, it really doesn't matter. However, with price volatility increasing for the next 90 days in April, because that's what's going to happen, is that both markets are going to be great in the bull rally. So the pullbacks, both sides are going to have more dollar price movement, and the various strike prices here in this Nasdaq 100. And these options, when they make huge money, but you know, the professionals, if you want to come and get busy here, I'm going to be opening up a brand new index option room that will just for these players. If you're trading 50 contracts plus and higher, then this is the place you're going to want to be to get wholesale. So we're going to be using the monthlies, and I'm going to go to that 27.25 call, and I'm going to just show you once again. It's in there. It's right here, and we're going to steal that bid. It was up $11, and we sold into that move because we bought it at the lows, and you can see the range. But here's the thing: the 27.25 call is going to gap down in value, and the MMTs in the index training market maker program are going to get wholesale bids. Yes, we would like to steal this bid at 55.40. Here it is Friday right now. And we're going to try to steal that call side on that left elbow gap down on Monday. And what we're going to do is we would like to start getting this contract right about, let's say our bids are between 25.50 on the lower end at the moment to a wholesale bid for the MMT, but it's subject to change at 28.50. That's a huge markdown to that wholesale bid. So they lose all of that positive dollars because people don't know how to sell them. That's the problem. They're going to go down in value on Monday. Buying over here wholesale, when they marked it down 18.46, that's going to pop back up above that high. And that's what we call making a market in index options, using call and put structures. And having said that, I'm going to show you where the 2,800 put is. Now, here's that call. And I want you to know that the call hit a too big of that call. The high was $84 $42.97. And this last week's low, so is 42.50. So they've already marked the inflated overbought call side of the market, which is the bull side. And that now on Monday, the MMTs will be trained on how to get that low entry. And remember that this is all done before the fact, not after the fact. But we know how markets operate because we know how high frequency model machines operate. And we build our own applications because that's why this Nasdaq daily chart is going to be the one that tells us the truth, where this first double left, first, second, and where is that gap down where the people on the sideline are going to come hipping right off of that bottom, even though you're going into a earnings season starting Monday. You're going to have lots of headline volatility. I'm giving an all-out worldwide alert, as I did, that the volatility exhaustion high, so you get exhaustion highs, and the volatility in bulls start to show their counter movements to their bull movements to support levels. All right, MMTs, we have an all-out alert support level down here. And that's where the slower end is going to be, right above that 3,000 mark. That's the lower end of it. We've got other ends that we can gap down to, and it'll be down to this half bar right here. That's this big breakout bar, and that's 3,018 there. I just want you to know. But you do have some other bars in here, and we're going to be monitoring exactly where the lower support levels will come into play. However, the gap down here, and that we take the first bull exhaustion reversal, how to trade the long side to the top side, then how to apply entry and exit management within bull exhaustion high prices, and why that is so valuable and rewarding to you. And we want to make that clear, and how things do bounce at support level. And remember that this is a market maker platform. It's not your standard charting platform like this in the background. But I want to feature that 27.25 call, and I'm going to be stealing the bid at the lowest level. I could have never bought them up here. No, in fact, I will show you very quickly. Once again, I'm going to put the $2,800 put option in there. And what I'm going to do is I'm going to throw this in here, and when this side of and this is on a weekly level, this was the time to be buying that $2,800 put, and it was marked down to our level, and it was marked down to such a level that this put option at one time, back on 129, when the bull was in rally, this thing was $313. I can tell you right now, though, this contract got to a low where it was buyable and where we were buying it. That's $37.59. The high was 75. They marked it down to 37 at the low because that's what they did. And then they closed it at 56.86. And this was the deflated side of the weekly movement when the Nasdaq 100 and the Nasdaq comp, I'll show you the Nasdaq comp, when the Nasdaq comp was doing this, making that double, that lower high reversal right here, you can see that. That's when that contract hit that bottom. And now they're going to go higher in value. And that this was the deflated side when the Nasdaq 100 and the Nasdaq comp was, the Nasdaq 100 was right up there at 28.92 below, and you had a reversal. And what happened was that this transaction made a high to $75 right here. Yes, it did. And that was the peak of this first high right here. All right, $75. Yes, this is a put chart. Most people want to trade options, never even seen it, let alone know how to read a level 2, let alone understand the high frequency models that are also involved. We're looking at a 2800 Nasdaq 100 put at the wholesale bid entry. Now, here's the most beautiful thing. The 27.25 and the 27.35 call is in play for that left elbow gap down on Monday. And that, well, let the truth be told, as far as the way that they're going to trade those total numbers that you're going to see for the first time of the calendar bull year is where the bull inflated. Now, here's a weekly movement. Look at here. Look at this call. This was a 27.35 call. Look at the highs. The highs, I'm going to tell you, they were $66. Look at them down here. They're down here. They're down here at 33. Now, I get to do what? Get that lowest bid level where the Nasdaq composite will bounce at support level, and the Nasdaq 100 call option, they'll take all the premium out below this level, and I will get wholesale, and you will see on Monday morning. And once again, MMTs, it's been a privilege spending my Friday morning with you. It's Good Friday, and I want everyone to know that. So this is the way to trade these things is that they were inflated and people get stuck in them up here, and now I get to buy below the market because I am a master at that, and I get to take out all of my dollar cost capital risk below the market with the higher reward to sell back to the public, because that's what you're trained to do here.